A common concern when developing trading systems is whether they will continue to perform well in the future. In other words, even if you could have historically made money with a given approach, will you be able to make money using it in the future? This concern is true of all technical trading. If you look at a chart of Amgen and decide that a particular method appears to work well, then your decision to use that system is based on the assumption that Amgen prices will behave in a similar way in the future. More specifically, the characteristics that this particular system is relying on will be the same as this stock continues to trade. Now, this concern is especially true for neural networks and optimized systems. With these approaches, the weights and settings used by systems are optimized to provide the best results possible for a set of historical data. Without safeguards, this could actually have negative effects. Systems that are overly specialized on historical data typically perform poorly on new data. TradingSolutions protects against this by providing several features which help you to create better general models and protect against overspecialization. Understanding how these features work will help you to use them effectively to create more profitable systems. Now, the primary feature for this is the setting aside of data for validation and testing of optimized systems. Specifically, when you optimize a system over the last 5 years of data, TradingSolutions defaults to using part of the data for training, part of the data to make sure a good general model is found, and part of it to perform your own independent testing. These optimization ranges are used both for training predictions and optimizing of entry-exit systems. For more information on these ranges, see the video help. There's a video called What are Optimization Ranges? Understanding these optimization ranges is particularly important when analyzing signals to determining if they're worth trading. Here I'm going to analyze this signal. Many times, training or optimizing a system can produce a signal which produces good results over the history of the stock. However, what is most important is how a system will perform on new data that it has not been trained with. Because of this, the results for the testing set, or the data that was set aside, are often more important to review. You can quickly analyze how signals performed on this data by selecting to analyze it right here. For instance, right now I'm looking at analysis for all of the data I have loaded. It's a nice equity curve. But let's look at it just for the testing set, which was, again, the data that was not used for training. I'm going to change this, copy the optimization from the field. This is the field we're currently looking at, and it's going to look by default at the accuracy testing set. It's loaded those dates, and boom, there's the equity curve for the new analysis. And actually, you can see that it did quite well over the past year. Another feature of TradingSolutions that facilitates better generalization is the default settings available on the neural networks. Since neural networks are mathematical models trained using historical data, it is theoretically possible to train them to detect every specific case that appears in the training data. Unfortunately, this typically yields very poor results when it's used on new data. This is because, in this case, the neural network was not forced to learn general concepts, just specific conditions. To encourage more general learning, the number of free parameters available in the neural network is limited based on the amount of data being used to train it. This ratio is called the samples to weights ratio. By default, TradingSolutions automatically maintains this ratio to make sure the neural networks are better able to make generalizations and handle new situations with higher accuracy. One additional feature TradingSolutions uses to prevent overspecialization is the parameters it uses on the optimal signal. Here I'm going to add an optimal signal to the chart. Now let's look right up in here. Now, by default, the optimal signal does not highlight the turning points with the absolute highest profit for the historical data. This is because the beginning and end of trends can often be masked by minor variations in the price. Because of this, TradingSolutions defaults to allow for minor drawdowns when entering into profitable trades. This allows the neural networks to better concentrate on detecting the whole profitable trend that can sometimes be masked by the minor fluctuations in the data. To summarize, over-optimization is something to be aware of when creating signals for technical trading. However, the defaults in TradingSolutions will typically help you to avoid encountering any sort of problem.